Hi everyone, thanks a lot for joining the Seasoned Trader episode 2. After the last episode, I feel you must all be really excited. And if you weren't able to attend the last one, we still have the video up on YouTube. So after this session, you can quickly check it out. So we have Aryan with us today. So I'm pretty sure you must. I don't really need to introduce him again because you already know him really well, better than me, in fact. So hi Aryan, how are you doing?
Hi Ritu, all good. You tell me what's happening.
I'm doing good, yeah. So
Thanks.
yeah, for the past, I think we had our last session 3 weeks ago, and I went back and I tried a lot of techniques that you taught us in the last one related to candlesticks. And
That's interesting.
before really putting in any big amount, I tried to test it with a smaller, anything that I could afford losing. So I think, yeah, it played out pretty well. I'm still learning a lot, and I believe there are so many more things for us to learn here. So yeah, let's get started.
Sure, Ritu. That's amazing that you went out and tried all of what we learned last in the last session because it's very important for us to practically apply whatever we are learning. Otherwise, it's just a waste of time for me and you and all of us, right? If we are not applying what we are learning, it's just a waste. So it's very important that whatever we are learning, we always go out there on the chart and try to figure out if what we have learned is actually, turning out to be how it should be. All right, so let's start our second session. Now, if you guys remember in the previous session, which was our very first session, we covered trends, then we covered candlestick charts, and we also covered three important candles that we need to keep in mind while trading. Next, we went over to support and resistances, and we learned how they change their characteristic once they're taken down. And finally, we concluded the session with understanding why Brine is one of the best platforms to trade out there. Now, in this session, we are going to dive deep into candlestick charts, okay? And if you remember in the previous session, we spoke about candlesticks briefly, and we also learned how to read them, the open, high, close, and the low. And we also spoke about three important candles, which was the hammer, the doji, and the marubozu. All right. And if you guys want to recap that, you can go on YouTube and search for the session and you'll find it. We'll also put a link in the chat section so you can easily find that YouTube video. Now, in this session, we are going to talk not only about single candles, but we are going to talk about a setup. Okay. And in this setup, we are going to include volume as well as price. Okay. So what this will do is it will increase our accuracy by combining two different dimensions of trading, right? Whenever we are trading, we are always so focused on the price of the asset that we are trading that we almost miss out on the other two characteristics, that is the time and the volume. Okay. And in this session, we are going to understand how do we use volume in addition to the price to improve our accuracy.
Right.
Okay, and then finally we are going to go over Q&A, and then we also have a few exciting updates from the Brine team. So stay tuned. Now, talking about the very first setup that we have here, or the very first candlestick pattern, and this is one of my favorite as well. It's called the morning star pattern. Okay, and this pattern, I'll tell you, is so helpful in finding out the exact bottoms of so many markets. I've personally used it so many times and it works out very well if we combine volume with it. Okay. So as we see in this pattern, what's happening is that the price is moving down continuously. Okay. The price is moving down and I see that, I get continuously 4 to 5 red candles, which is telling me that, okay, the trend is downwards. But then what happens is that I finally see a spinning top kind of a candle, okay, or a doji kind of a candle, which has a long wick on top and bottom and a small body, okay, which again, if you remember, tells us that the bulls are trying to come back. Now, in these candles, these four red candles, we know for sure that the bears are winning the battle, right? The bears are winning the battle continuously one after the other. But finally, in this spinning top kind of a candle, I see that the bulls are catching up, okay? And then right after that, I see a big green candle. Now this tells me that all the bears were in control for the past 3-4 sessions, but now after giving a tough fight, the bulls have finally come back, okay? And they have come back stronger. Because if you see, this one candle is way bigger than this candle. And this one candle is covering almost 3 to 4 of the previous red candles in just one candle. So that tells me that although bears were in power, finally there is a shift of power from the bears to the bulls. Okay. Now, how do we include volume in this analysis? Okay. Now, before we understand volume, we first need to understand that whenever we're talking about volume, we have to make sure that the volume is with the trend. Okay. By this, what I mean is that whenever the trend is down, the volume should increase in red candles, and whenever the trend is up, the volume should increase in green candles. And whenever I see the opposite, that is when I will become alert and I will look for trades. Okay. Whenever I see that the market is going down, okay, the trend is down, the market is going down, but the volume has started to has started to decrease. That is telling me that maybe this trend is going to get over very soon, and we'll see an opposite move very, very soon. So we were talking about morning star pattern. Okay. So I see continuously we are getting, bearish candles one after the other, and the price is moving down. And I also see that the volume is increasing while the price is going down, right? I see a good volume here, good volume here, good volume here again. But suddenly here, right in this spot, I see that the bulls are trying to come back, okay? Because the bears are not able to push the price further down, okay? And that is telling me that the bulls have started to give the bears a tough fight. And right after this, I see one big bullish candle with good volume. And what I mean by good volume is more volume than the previous 4 to 5 candles. So if I look at this volume bar, the volume of the previous 3 to 4 candles, okay, these 4 candles is lower than this one single volume bar. And that is telling me that the bulls have finally come back. Okay. And once I get this kind of a setup right at the bottom of a trend, okay, if you see this whole trend, we caught the bottom of this trend, right? And now what we're going to do is I'm going to keep a stop loss right below the low. Okay. So the low of this candle is approximately 15,500. I'm going to keep a low right below it, and I'm going to enter when this high is taken down. Okay, so when this high of 20,800 is taken down by this bullish candle, I'm going to place my trade. I'm going to buy here, and I'm going to keep my stop loss here. And my target is going to be twice my stop loss. Okay, so if I enter the trade here, if I enter the trade here, my target is going to be twice my stop loss. So my stop loss is here, and my target is going to be somewhere here. Okay, and I'm going to wait for my either the stop loss or the target to be hit. And once my target is hit, what I'm going to do is I'm going to book half my quantity, and I'm going to increase my stop loss from here to here. to my entry price. And then I'm going to trail this. I'm going to trail this trade till I get another big bearish candle, which is going to kick me out of the trade. Okay. So we're going to keep trailing our trades till we get a strong signal that, okay, from here, the market is going to return. Okay.
Got it.
So this was all about the morning star.
If I
Next.
didn't know
Yeah,
any
tell me.
better, I would say Morning Star is the name of some band of a British band or something.
Yeah, it does sound like that. It does sound like that.
Can I ask something?
Sure.
For me, it's interesting which time frame you use for morning star pattern. Is it work on day time frame or is for higher week, months, some?
So personally, I'll tell you, I've seen that this works best on larger time frames. So I'm talking about weekly or monthly time frames. On 15-minute, 20-minute, 30-minute time frames, I haven't seen this work very well. But on larger time frames like weekly and monthly, it works well.
Okay, thank you.
Most welcome. Got it. Now talking about the evening star. Now, just like the morning star helps us find out the bottoms, evening star helps us find out the top of the market. So it's a very, very good tool for investors as well, because they can find out, okay, from here the market is going to reverse and they can liquidate their position. And for traders also, they can, put a new short at the top of the market and ride the whole trend. And similarly, how we followed volume in the previous pattern, we're going to follow the volume here as well. I want the volume to be consistent till here, till this candle. I want the volume to be consistent. After this candle, I want to see some increase in the volume in this and finally in this candle. Okay. So what this will tell me is that the bulls have been pushing the price up higher and higher and higher. And finally, what's happening is that the bears are trying to come back. Okay. And just to tell you guys, the color of this candle does not matter. Whether it is green in color or red in color, it does not matter. What matters is the wick, the length of the wick. Okay. So if the length of the wick is more than the body, that is all I care about. I don't care about whether the candle was red or the candle was green. I just want the wick of the candle to be bigger than the body, because that will tell me that there is indecision in the market. And although the bulls were in power, finally the bears are trying to come back and causing that indecision in the market. Okay. So I want medium volume here. I want high volume here. And finally, I want higher volume here in this candle. Okay. Let's see this on a chart. So if we see this top, which was at 69, I am seeing higher prices again and again and again. And then what's happening is I'm finding doji kind of patterns, spinning tops continuously one after the other. I see 4 spinning tops. And then I see a big bearish candle. And if I try to look at the volume also, I will see that the volume of this big bearish candle is more than the previous 3 candles, right? And that is giving me the additional confirmation that, okay, I can place the trade here. Again, what I'm going to do in this trade is I will keep my stop loss right above the high of that trade, and I will keep trailing this trade till I find, a candle against my initial trend. So I will keep trailing it. And finally, when I see such kind of patterns forming, that's when I will exit the trade. Okay.
Got it.
All right. So these were the 2 most, important patterns, and which I personally also trade. Coming to the next pattern, which is called the bullish engulfing pattern. Now, as the name suggests, the bullish engulfing patterns, what does basically, it engulfs the previous 1 or 2 candles within itself. Okay. So what I will see here is I will see continuous falling prices, and then I will see one big bullish candle that will engulf the previous 2 to 3 candles. And again, how I want the volume in this pattern to be is I want medium volume, consistent volume in these 4 candles, and then finally I want a big volume bar on this green candle, which will give me the confirmation that okay, I can go ahead and place the trade. If we see here, I see that this one big bullish candle is completely engulfing the previous 3 candles, right? In fact, 4, if I consider the wick of the candle. So this one big bullish candle is engulfing the previous 3 candles, and it is also very high in volume. It is higher than the previous 4 volume bars, which is giving me the confirmation that, okay, I can take my trade here. It's very similar to the morning star pattern. Only thing that is different here is that we don't have that doji in between, okay? But everything else is almost the same. I want a big candle that is engulfing the previous 3-4 candles, and I want high volume, okay? And when I say high, I mean higher than the previous 3 to 4 volume bars. So this volume bar is higher than the previous 4 volume bars, and I can, easily place a trade here. I'll keep my stop loss here, and I will keep trailing it till I find a big bearish candle, and I know for sure that the market is going to turn out from here. And just like the bullish engulfing pattern, we have the bearish engulfing pattern. What's happening here is that the price is continuously moving forward. It's moving up. And then I see a big bearish candle. And when I see a big bearish candle, I will look out for the volume. And when I see that the volume of that one big bearish candle is way higher than the previous 3-4 candles, that's when I'll place my trade. So if I see this candle here, the price had been continuously going up. Finally, I see a big candle which is engulfing the previous 2 candles, right? This one candle is almost of the length of the previous 2 candles. And if I look at the volume also here, the volume is higher than the previous 5 candles, right? In fact, even more than that, it's higher than the previous 10-15 candles, which is giving me the additional confirmation to place my trade here. And I will keep my stop loss here. I'll keep trailing it till I see a big bullish candle. Okay. And what's even more interesting here is that the body itself is engulfing this one whole candle. Okay. So even if the body is not able to engulf the whole candle and the wick is able to engulf the whole candle, it still is a trade, but I'll be more sure about the trade when the whole candle is being engulfed by only the body of my bearish candle. Okay, so if I see here also this one big bullish candle, the body of this candle is engulfing the previous 4 candles. Okay, if I include the wick, it is including even the previous the candle before that. But only if I look at the body, it is still covering the previous 4 candles, and that's giving me the confirmation to take the trade.
Got it.
Okay, so the 4 patterns that we spoke about, the bearish engulfing, the bullish engulfing, the evening star and the morning star, these 4 patterns are called, pivot patterns. What I mean by pivot patterns is they tell us from where the market is going to turn around and move in the opposite direction. And the candles that we're going to talk about ahead, which is the 3 white soldier and the 3 black crows, they tell us about the continuation of the trend, and that is why they are called continuation patterns. Okay, so these candles are not seen at the bottom or the top. These candles are found between the trend. Okay, and the way I use these patterns is by getting the confirmation to hold on the trade that I'm already in. Okay, so just to give you an example, I see a morning star. Okay, when I see a morning star, I'm going to buy. Once I buy, I will keep riding the trend. And if I see a 3 white soldier pattern, I'm going to be assured that, okay, the trend is going to continue after this because I've seen this powerful bullish pattern. So the trend is going to continue and I'll keep holding that trade. I won't exit from that trade. And if I'm in a buy trade and if I see the 3 black rows pattern, what I'm going to do is I'm going to exit the trade because I know that it's a powerful bearish pattern and now the market is going to come down. And that's when I'll exit the trade. Okay. So these 2 patterns I used to find out whether I will keep in that trade or not, or whether I'll exit the trade.
Got it.
So if I see here, I see 3 big bullish candles with good volume. And this is my 3 white soldier pattern right there. Okay. So what I want to see in this 3 white soldier pattern is high volume with big bullish candles. Okay. And if the wick of these candles are small, it's even better. However, in this pattern that we have, the wicks are not that small. If they were even smaller, that would have been an even stronger signal to continue being in that trade. Okay. And also, I don't want to enter on this pattern. Okay. I don't want to make a fresh buy on this pattern. And the reason behind this is I know that this will occur in the middle of a trend. So if I try to measure this whole trend from the bottom to the top, it's approximately 10,500 points. Okay. And if you see, this pattern has occurred almost at the middle of that trend. So this is approximately 4,000. And from here, if I measure, it's another 6,000. So I don't want to enter on this pattern because I know that this is not the exact bottom. Okay. If I enter here, I might get a few points, but from here, my risk will be too big. My stop loss, which I will place here, will be too big for this reward. Okay. And I always want my risk to reward to be at least 1:2. So if I'm risking $1, I want to make at least $2. I don't want to risk $1 to make $1. Because if I risk $1 to make $1, I will have to be right almost 7-8 times to cover up for all the trading cost and the losses that I make. But if my risk to reward is 1:2, even if I am right half of the time, I will still make money very easily. Okay. So this pattern I will not use to enter the trade or make a fresh buy. I will only use this pattern to find out whether to continue being in a trade or not, or whether to exit the trade.
Got it. That was actually quite insightful because it's written bullish, so a lot of people might think that you have to place a buy order at that point, but that's the middle, right. So you might not be able to break even.
Exactly. So just like the 3 white soldier pattern, we have the 3 black crow pattern. And in this pattern, what I want to see is, medium volume here, and then I want to see increasing volume here. Let's try to find something. Yeah, I have it here in the daily chart, I think. Right. So I see one after the other bearish candles, and I see that the volume is also slowly increasing, right? In this candle, we have little volume. Then in this candle, we have higher volume. And finally, in this candle, we have even higher volume. So this is, a signal to me that, okay, the trade that I took here, because if you remember on the weekly chart, this is an evening star pattern, right?
Right.
we have bullish candle, then we have a doji, and then we have a bearish candle. So we have already taken a short position here, and then when I see that, so I took a short here, and then when I see the 3 black crow pattern here, what I'm going to do is I'm going to continue being in that trade. I'm not going to exit that trade. And again, if I see another 3 black crow pattern right here. So I will continue being in that trade and I will ride that trend. That is how I am going to, skew my risk to reward position and make money. Because I'm never going to make big money if I keep risking $1 for $2 or $3. When I am able to trail that trade, that is when I make money. If you read about a lot of hedge fund traders and a lot of big traders, they'll tell you that in a year they have 4 to 5 big trades. Okay, they have thousands of losing trades, but they lose very little on those trades. But those 4 to 5 big trades that they have, they make so much in those 4 to 5 trades that it covers up for everything and much more. So that is what we're trying to do here. We don't want to exit early. Okay. I want to stay in that trade if I see such patterns, and I will be on the lookout to see such patterns. And when I see such patterns combined with volume, so even in this pattern, we see increasing volume. And even in this pattern, I see increasing volume. So I know for sure that, okay, my trend is right. I am sitting on the right boat, and I will continue sitting on this boat till it reaches the shore. Okay. And I'm not going to exit early. It's a very natural thing for us to exit early when we are in profit, because we want to book that profit. Whereas when we are in a loss, we generally try to hold on to that trade and we say to ourselves, okay, maybe tomorrow it's going to turn profitable or break even and then I'll exit. And that never happens. So whenever you are in a loss, exit it as soon as possible. Once your stop loss is hit, exit it. But when you are in a profitable trade, look for reasons to continue being in that trade. Because market has this tendency of moving in the trend that it is in. Never think that, okay, the market has moved too much, too far, too fast, and then now it's going to reverse. That's not happening. What happens most of the times is that if market is continuing in one direction, it will continue going in that direction. Okay. And every buy order that is placed is making the market stronger. And if the market is going down, every sell order that is placed is making the market weaker and it's going to go even further below. So always try to trail your profits. Never try to exit early and book the profit. Because we're looking for that 2 to 3 big trades that's going to cover up for, hundreds of losing trades.
That's a really good advice, Aryan.
Absolutely.
Yeah.
All right. So moving to, I think these are the last 2 patterns that we have, right? Okay. Here we have the tweezer bottom, and then we'll talk about the tweezer top. So a tweezer bottom is basically a small body and a very long shadow or the wick. Okay. And I want that shadow below the body of the candle, not above. So if you see, we don't have any wick on top. We only have a lower wick. We don't have an upper wick. So I see prices going down and then I see tweezer bottoms. Okay. I am looking for as many tweezer bottoms as I can get in the bottom. Okay. So if I see that the price is going down and then I find 4 to 5 such candles, okay, with high volume, right? Higher volume than the previous 4 to 5 candles, I will take the trade there and I will place my stop loss right below the low. Okay, let's try to find out something on the real chart. Okay, if I see here, I see that the prices are moving down. Okay, and then I start to see these tops. Okay, these bottoms, which are very small when comparing the body and are very big when we look at the wicks. So although we have higher wicks also here, but we also have lower wicks. Okay. This is telling me that there is indecision in the market, right? The bears were in power all this while, but finally they are having some resistance from the bulls. Okay, and that is why they are not able to push the price further down, even after having such powerful candles with high volume. Right. Let's look at the ETH chart. Let's look at some other coins. Okay, let's look at compound. Okay, if you look at the candles right here, okay, in this area, the price was moving down all this while, and then finally I see a lot of almost 17, tweezer bottoms, very small body and long wicks, which is telling me that, okay, there's a lot of indecision in the market, and then there is continuous indecision in the market for, almost 17 days. The market is not able to decide whether to go up or whether to go down. And remember, the longer the indecision lasts, the stronger the next move is. Okay. So here, if I saw just 2 or 3 or 4 such candles, I will not be so sure about a strong next move. But if I see 10, 15, 20 such candles, which is telling me that the market has been in an indecision for so long that the next move the market will give will be very, very big. And just as we saw here, after this big fall and this indecision zone that we have here, I see a good up move and a very, very fast up move. This whole trend took almost 57 days to come down from here to here, which is 54 levels to 30 levels. And from the 30 levels, it hardly took 13 to 14 days to go all the way up to 55. Okay. And I see a very big volume bar here.
Yeah.
Right. So where I will look for these candles is when the market has moved, has made new bottoms again and again and has moved to lower lows. And then I will look for these indecision kind of candles, which are called tweezer bottoms. Very small body and long wicks. And that's when I will place my trade. And I will keep my stop loss right here below the low. And I will buy once this high is taken down. And I'll keep my stop loss here and I will ride this whole trend. And the longer the market stays in that indecision zone, the better it is for me, because the next move is going to be even faster and it's going to be further. Let's look at the next pattern that we have here, which is the tweezer tops. Okay, right here I see an ideal tweezer top. Okay, if you look at this particular candle, it has almost zero lower wick, right? The wick below is very, very small, and the wick above it is almost 4 to 5 times off the body of the candle, which is telling me that it is, destined to go down from here. because the market went up and the bears pushed it all the way down, and they were able to close at the low. And I see multiple such candles. So one after the other, I see this candle, then I see this candle, and I see another such candle. And all this while the volume has been increasing. So I see some volume here, then I see higher volume here, and then I see even higher volume here. Right? And that's giving me the confirmation to place the trade once this low is taken down. Okay? So whenever I see a tweezer top or tweezer bottom, I'm not going to jump right into the trade. I'm going to wait for the low. If I'm in a tweezer top, I'm going to wait for the low to be taken down. And if I'm in a tweezer bottom, I'm going to wait for the high to be taken down. And then I will place my trade and I'll keep my stop loss right below the low. In this pattern, what we do is when this low is taken down, I will sell here. I will keep my stop loss here at 66 approximately, and I'll keep riding the trend. As I say, always trail your targets. Let's look for some other charts. If you guys have any chart that you would like me to discuss here, please let me know. Okay, let's look at watch. Okay, if I look at Solana here, I see the price moving up, and then finally I see a tweezer tweezer top, right? Where the body is small, the upper wick is very, very big, the lower wick is small, and the volume is also good, and that's when the low is taken down. I'll place my short here, I'll keep my stop loss here, and I'll ride this trend. All right, so we are done with our session. If you guys have any questions, please let me know. Once the Q&A is done, we also have very exciting news for you from the Brine team that we'll be covering. So please let me know if you have any questions right now.
Can I ask?
Sure, please
Sure.
go ahead.
Have you developed any personal trading rules or principles that guide your decision-making process?
Yes, absolutely. So, these are the very basic sessions that we are having right now because we want to take everyone along with us. Even we have a few beginners here. We want to take all of them together with us. So we are having basic sessions right now. Earlier, as I mentioned, we're going to talk about X-axis trading. We're going to talk about volume price analysis. We're going to talk about 3D trading, and we are also going to dive deep into Elliott wave and Neo wave trading. Okay, and I'll just give you a brief of what all of this is about. So whenever we're talking about 3D trading or X-axis trading, we're trying to combine the price with the time. If you see, all of us, all the traders are mostly focused on the price of the asset, but we always forget to take into consideration the time. Okay, and that is what we are going to focus on in the coming sessions. I think maybe in the next sessions or the next sessions, we are going to talk about time, and that is a very a topic that is not very much talked about in any trading session you go to. Time is not really talked about. We always talk about price, then maybe we'll move on to volume, but time is something we never discuss, and that is what we're going to do here. And I'll tell you personally, using time in my analysis was a game changer for me. It improved my accuracy from 50-60% to all the way up to 80%, and it's going to be very, very insightful for all of you. So stay tuned. We're going to bring those sessions very soon to you guys.
Thank you for answer. And one more question. How do you stay updated with the latest news and market trends in crypto space?
You're talking about the news in the crypto space.
Yes. About Tether news for today, we have this small unpack. I will ask you, how do you stay updated? Where you check the latest news?
Friend, I'll tell you, when I trade, news is the last thing that I'll consider. Because I know for sure that whatever news I'm going to get is going to be stale. What I see on my chart is fresh and new, right? Price is going to tell me everything in advance. In fact, in the coming up sessions, we're also going to discuss about how we could have the FTX collapse or the Luna, all these coins that went down the drain. We could have predicted all of that only if we focused on the chart, on the price chart. And whatever news we are getting, it is all stale. We get it 1 or 2 days after those big boys get it. So personally, I do not use news at all, but yeah, obviously we need to stay updated. And for that, we are also, coming up with this idea of a newsletter that we're going to publish maybe once a week or once a month, wherein we're going to cover all the latest news of the crypto world, and we're going to bring that to you. So stay tuned for that as well. But talking from the trading perspective, news is not useful at all. Once you learn how to use the chart to your advantage, you will not need anything else.
Yeah, he's conveying his thanks to you, Aryan, for the amazing answer. Okay, we have Mochas who's asking, security is a top priority. If in the case of your platform, Brine getting hacked accidentally, what is the solution of Brine to customers? So, first of all, such a case would be nearly impossible because we make use of ZKP tech, which is the most secure tech out there. We're backed by Starkware, and all of our deposit and withdrawal contracts have been reviewed by PeckShield and Starkware at the same time, and you can find the report on our website. And in any case our website goes down, you will always know which contract you deposited into through the blockchain, right, through Etherscan, and you can go to the contract, you can apply for a withdrawal there, and since we're going to enable fast withdrawals really soon, you'll get it in your account much faster, so you don't have to worry about those things. Since we are a completely decentralized exchange, we really promote transparency, and your assets are something that we do not hold custody of. They belong to you, and in any case, if even our domains go down, you can always go to the contract and you can withdraw your assets in 10 to 15 minutes. Yeah, shouldn't take long.
Yes, absolutely. And that is the whole reason we are building Brine, right?
Yeah.
We see all these different exchanges, that are not giving the right security to its users. And that's the whole reason we started this idea of Brine, and we are working so hard for it.
Absolutely. We have a question from Mermaid. So she has a doubt about trailing profit. What is the risk factor involved compared to exiting early? Which would be better?
Sure. So as I said, when we trail our profits, we minimize our risk at the same time, and we increase our potential for profit at the same time. I'll tell you how. So just for example, can you see my screen?
Yeah, we can see your screen.
Okay, great. So for example, I see a bottom here and I see a big bullish candle here. I place my trade here. Okay, I buy here, I keep my stop loss here. And now I want to trail this trade. Okay, I buy say at 26, my stop loss is at 21, and my initial target is say this high, which is 38. Now, when my initial target is reached, I am going to look at the previous candles. If I look at these previous candles, these 3 to 4 previous candles. And for that matter, even if we look at these candles, we will see that these candles are bullish candles, very, very bullish candles with increasing volume. Okay.
Right.
And what I'm going to do here is I'm going to move my initial stop loss to my entry price. Okay. So from 21, I will move my stop loss to 26, which was my entry price. What that will do for me is it will make my potential loss 0. So now I know that no matter what happens in this trade, I am not going to lose any money on this. Okay, whether I'm going to make money or not, that's a different matter, but I'm not going to lose any money on this. Okay, and then I can very easily trail my profits because I have no risk of losing money. Okay, now, of course, there is this risk of losing out on this profit that I have here. Okay, but I am not risking any of my capital. Okay, and that's the idea behind this, that we are minimizing our risk while increasing our potential for profit. Okay, so my initial target was 38 and I moved my stop loss to 26. Now I will keep riding this trend. So I ride this trend and then I see again big, very, very bullish candles. I will keep riding the trend. I'll keep riding my trend. And when I finally see that a low is taken down, okay, I have a low here at 128 and this low is taken down. Now here I will exit the trade at 115. So if you see, my initial target was 38, but because I was trailing my profits, I finally exited at 115. So my initial target was only for 40%, but I ended up making 330% of that trade. Okay, while risking nothing. And in fact, if the market keeps moving up, I will also keep moving my stop loss higher and higher. So first I moved from 21 to 26. Then once the market reaches here, I will move my stop loss to 31. Then once the market reaches here, I will move my stop loss to 43. And once the market reaches here, I'll move my stop loss to 62. So if you see, after 1 or 2 trails, my risk is nothing. And even in the worst case, I am still going to make some money. I might make less money than what I would have, but I'm still making some money. So that's the idea behind it. And if you take 10 trades, you will find 1 or 2 trades in which you will make much more than what you are risking. And that's the whole idea of trading, that at least once or twice, you will catch on to a big, big trend, and that will cover for all your losses and all your wrong trades, missed trades, your trading fee, brokerage, everything.
Absolutely. I believe that answers your question, Mermaid. Okay. Mermaid is thanking us for the detailed explanation.
Most welcome.
If you have any more questions, you can either unmute yourself or you could always post in the thread. We'd be open to answer them. Okay, meanwhile, I don't want to, keep it all quiet. I'll just go ahead with the updates that we've had for, the past 2 weeks. So as I had posted on the announcements channel, we have listed USDT, then we listed Arbitrium, we listed Matic this week. So it was a very fast-paced week for us. We have listed 3 new markets. That's big kudos to all of us as a community. Let's get on and really start trading there. And initially, I think a month ago, we received the feedback that the spreads were a bit higher, so we worked really hard to reduce them, and I think now they're comparable with other competitors of ours. So the spreads have reduced a lot. So I hope you're all going to go on Brine and try what Aryan has taught us today in new markets, right? And apart from that, we also listed on L2Beat, we listed on DeFi Llama, and we just listed on DeFi Llama yesterday, and within 2-3 hours we went from the 15th spot to the 13th spot. So that's really, really bullish for us, right? And I hope in the
Yes.
future we come on, the first place. So yeah, actually we had already posted about us being on the 15th spot, but it was proven wrong because we took down 2 spots. But that's something that we would love to be wrong about, right? So really, that's the best mistake that we could look for. And moving on, since you all joined this session and you all really learned something new, I want to share some early updates with you. So we have a lot of exciting features coming up. The long-awaited Sol score is going to be up soon, by the end of this month, preferably. But if it comes sooner, you're all going to be the first ones who will get to know it. So please, hang on to the Discord, hang on to our Twitter, and keep yourselves updated. And apart from that, we'll have fast withdrawals on Ethereum coming soon. We'll have fast deposits coming through Polygon, and deposits on Polygon are super, super cheap. So it'll be way, way, way easier for you to move your assets to Brine. So these are a few updates that we've been working on, and we hope it will make your trading experience on Brine a lot better. So yeah, let's go for it.
Absolutely, Ritunda. Thank you so much for all these updates. I think, with ARB and matting coming up on our platform, it will really excite the traders, because these are the 2 coins that, give very big moves. So we're very excited to trade on those coins.
Yeah, Aryan. And also in the past, in the upcoming 3 months, we're planning to launch more than 20 tokens on Brine. So just please don't get irritated by the notifications you get on Discord or Twitter, because we'll be having so many announcements coming up. So yeah, really excited about.
Absolutely, we're waiting for it.
Yeah, absolutely. If you have any questions, anybody can just post it on the thread and we'll be happy to answer. Otherwise, you can unmute yourself and ask it yourself. Let's see. Okay. Okay, then moving on. If you have any questions regarding this session, you can ping us in the trading discussions channel, and you can tag either me or Aryan. Aryan's handle is @Aryan Chandel. You must be knowing about it, I guess. Yeah, Aryan, so thanks a lot. Maybe you could, give us a closing note, and then we could end this amazing session.
Sure, absolutely. So to end this session, all I want to tell you guys is whatever we discussed here, please make sure that you go out there and you practice and try to find out these patterns that we discussed, whether it was the morning star, the evening star, or the Tweezer top, Tweezer bottom. Please go to any of your charts, any of your favorite charts, and try to find these patterns. And also look out for the volume bars that we discussed, right? We want the volume bars to be higher when we are placing a trade compared to the previous 4 to 5 bars, so that we have that extra confirmation to take that trade. And this session is also going to be put up on YouTube. So in case you want to get a recap, you can go on YouTube, and we'll put up a link in our Discord channel, so you can easily find that out. And stay tuned, because coming ahead, we are going to have very advanced topics being discussed here, like x-axis, the time analysis that I spoke to you about. We're also going to talk about Elliott wave, Neo wave, Fibonacci, and we're also going to have live tradings done here live with you guys. So stay tuned, and we are coming up with very, very exciting things for you guys.
Thank you so much, Aryan. Have a great day. Have a great day, everyone. I hope you had a great session here with us. Thanks for hopping in.
Thank you so much for joining in.